Hi, welcome to the Market Alert for Monday the 15th of February 2016. On Friday we saw the market fairly quiet in the pre-market session there, just trading around 70 to 100 points, which is fairly quiet these days given the volatility that we've seen of late. You'll also notice in the pre-market session that the sell signals failed as the market was pumped to the upside. Every signal to the buy side already gave you a clue as what to expect in the official session. So the market opened, Dudley spoke for about 10 minutes, he didn't have a lot to say, then we had a signal, the market moving higher here. He was just repeating the usual rhetoric that we've seen, well not seen but heard from Yellen earlier on in the week as well. This is enough to move the market higher after he'd finished speaking. See how the market just traded sideways there, then gave the buy signal, and then the market moving higher, trading up to the 20-point scalp and coming back and sitting on this for some time before the market actually broke higher there, and then driving through the 15,849 before moving higher. And again, given that you let the market breathe a bit, moving the stop to break even, which is a lovely place here actually to move the stop to break even because it's a psychological number of 15,800. You can place the stop just below this to reduce the initial risk and then leave the market a bit more room to breathe, and then just trail up the stop either 50 or 100% below these rising lows. There's plenty of training videos on this in the additional video section in the member section of the website. So you can see by doing this once the market had broke, and that's of course as long as you're happy to move the stop to break even in the event that the market can come back and actually take out the stop. But again, if you look at the pre-market session, there were clues that the market was primed really to move higher as opposed to lower. And then in the quiet time, it really was quiet. We seem to have got back to the quiet part of the session there. You can see the short side. Again, this is not a good side based upon what had happened in the pre-market and this previous move. We had a profit on this particular trade just before the open, but of course you wouldn't have been trading that. That's at 14:30 bang on. You need at least 5 minutes for the market to work itself out. And then we see the market moving back to the upside. And again, a buy signal in the quiet period, but really quiet here. This is a loss of 12 points. The short one is 18 points if you did this as well. And then we get a short there giving over 20 points, but again against the main trend of the day, and the market moving higher. These two signals are late on in the session after the market's moved back up 100 points before it. And it's not something you really want to do on a Friday evening, and in particular today is President's Day, so the US markets are closed, which if we have a look at the daily chart and news, you will see there bank holiday USD, and that means it's President's Day today. Draghi is going to speak at 2 p.m, but that doesn't really affect as the market is closed today. Although saying that the market is moving, which you can see from the chart there, ETX still make up a market even when the US markets are closed. And at the moment, this market is showing higher, as you can see in the daily chart, heading back to the 16,201, which will be interesting to see how it gets on. So the market at the moment starting to put in a sideways trading channel, giving it both a low and a high. And let's see how the market copes with this. In the implied volatility, this was down slightly on Friday because of the push in the market to the upside. You can see this in the chart there, the market pulling back off the highs. And a quick look around a few of the markets. We've got the Shanghai, this down 0.24. This was down quite sharply earlier on in the session, coming in at 2006.83, I think that says. Very difficult to see from this range. But the market's down and has rallied back since, so doing what they can. I noticed that this morning they were actually printing some yuan. If we have a quick look through zero hedge, yeah, the People's Bank of China strengthens yuan most in 3 months as China stocks tumble after holiday. So that's why you're seeing this, and that's why you're also seeing the Dow moving up there as well, because again, central bank intervention, meddling with the free market, trying to bring things back to look as if it's too big to fail and everything's fine. Talking of which, Deutsche Bank on Friday, a big move up there, 11% rise in Deutsche Bank. That's because we've got, again, the rhetoric that they're going to be buying back 3 billion of their own bonds. Now, that sounds like a really good deal to move the share price higher, but there you go. I would have said that was a sign of weakness at the fact that they've got to do it, but this is all good news for the bankers. So, Deutsche Bank isn't going to go bust, so we're going to buy back 3 billion of our debt. And that will be fine, and that will make everything okay. Barclays obviously following on the heels, back at 157, also up 6% there as well. As it says in Zero Hedge article here, don't panic, experts agree this is not 2008. So repeat after me, this is not 2008, which is quite funny to end on a high note there, because it is. It's 2008, and it's going to be 2008 on steroids when it all starts to fall apart because of the massive QE bubbles and debt bubbles that the central banks have created. Right, that's it for today. Like I say, the market's closed today, so I'll see you on Wednesday. Have a great day, and as ever, thanks for watching. See you in the next one.